Welcome in our next guest. Joining us now, I'm very pleased to say, is Francis Stacy, economic strategist, Scarlet Oak Financial. And let's stick with the micro theme and some of these big stories which have really been driving the action this week, and that is Palantir. So snapping what has been a number of sessions of losses off the back of whether it be the broad tech sell-off or this short seller report, I don't know. But, I mean, do you think it warranted the sort of moves that we've seen in this stock this week? Because it's been somewhat of a roller coaster ride.
Well, it's interesting because the roller coaster ride is largely caused by, a valuation debate saying that valuations are now reaching levels that we haven't seen since prior to the tech bubble burst in 1999. And that I'm probably aging myself a smidge here. But the thing is that this valuation, these high valuations will continue to be tolerated as long as the global macro environment supports that. We saw indications of that today with the massive reversal in tech. Tech sold off about 1.8%, coming off of an all-time high until today's reversal with Powell's remarks. And Palantir's right in there. There is some debate whether it's relatively weak or relatively strong on AI, but it's heavily correlated with the NDX and also moderately correlated with the S&P 500. And so unless there is a catalyst to change the global macro environment, or unless there's something idiosyncratic, I remain constructive on Palantir. Also, most notably, in the recent sell-off, it held its 50-day moving average.
Yeah, I mean, certainly a lot of the momentum that we've seen this year has been driven by the optimism and the expectations that they're going to continue to sort of win these contracts, particularly in the government under the Trump administration. I'm just wondering, as far as what you're seeing here, as far as the pullback is concerned, I mean, do you think it was warranted, or do you think that's sort of behind us now, as far as sort of that negative sort of headline risk as far as this company is concerned?
Right, good point. So just watching how the chart is structured, right now we have a slightly higher low. If we hold the recent low and we continue to have a close above the 50-day moving average, I don't see momentum going to the downside unless we have a broader sell-off in tech. And then the question again becomes, are they relatively weak within the sector, or are they just heavily correlated with the sector in general? We definitely had some steam kind of letting out of the overheated Mag 7 earlier with the sell-off. And now the idea that the Fed is more dovish than expected and likely to pivot on policy is going to support the tech sector in general. But today, interestingly, it's the broader based rally because it's, the small cap stocks and other things are left behind. So you're seeing less of a move in the NASDAQ, but obviously this news is supportive of those stocks.
Yeah, no doubt about it, as far as what Fed Chair Jerome Powell had to say. And we are seeing very much the takeaways from that have been that he lent dovish, particularly with regards to, more focus perhaps on the job side of the equation. But I'm just wondering, just as we sort of cap off the week that was, as far as the performance in some of these tech stocks, Palantir included, I mean, some of that had been driven by some of the concern that, we are seeing stretched valuation. And now the whole show me proof of all that spend type questioning is starting to come back into the psyche here. I mean, not to mention that, the demand remains strong. I mean, we're certainly hearing that from the companies. But what do you make of, that view that led us to see that performance in what we saw in tech this week, and making everyone question, whether we are in an AI bubble?
Well, the AI bubble discussion comes from historical charts that correlate this, these valuations being as extended as they were pre the tech bubble burst. The other thing that looks like it might not be sustainable, and this was fantastically brought up in the Heat Formula newsletter from Matt Tuttle this morning, which was just to say that AI CapEx is actually sort of propping up a lot of GDP, because the CapEx is also calculated into the GDP number. So again, some would speculate that this is not a sustainable operating basis. However, behind all of that, you have a lot of liquidity in the system. And whenever you have a lot of liquidity in the system, it's going to find a home. It's going to find a home in big tech. It's going to take advantage of buying these dips. We'll see if the recent lows hold. And Palantir is going to be, considered a high quality company with a high quality product for the longer term, unless it has some particular news about some specific idiosyncratic risk that it does not share with the rest of the sector or the global macro scenario. I'm constructive on Palantir and just watching for it to hold the recent low and continue to hold the 50-day moving average on the closing basis.
Okay, let's shift gears to the Fed and what your takeaways were from that. No doubt Powell opening the door there. Do you believe this was a strong nod to September?
Yeah, I think what was interesting is the last meeting that they had where they decided not to cut rates was sort of 48 hours after the jobs report. He noted that there was some additional weakness when you looked under the hood in the jobs report, and that was the basis for his shifting sentiment. Obviously, in the background, there's a lot of political pressure. If we know and understand, love him or hate him, the Trump administration, we understand the art of the deal, and he has been ramping up the leverage on Powell and ramping up the leverage on the Fed and pressuring them to cut rates. They have their dual mandate of price stability and full employment in certain economic seasons. When you're looking at growth and inflation, whether it's accelerating or decelerating, those mandates can seem at odds. And that's what he was addressing today in the press conference. I do think that the Trump administration bringing a lot of attention to their building costs and other things about the Fed has also put pressure, external pressure on the Fed. But he is citing the deterioration under the hood in the jobs report that was recent as a reason for his dovish pivot. It's sort of a win for everybody.
Yeah, shifting the balance of risk may warrant adjusting a policy stance was really the line that got Wall Street off to the races today as far as equities and that rally we've seen today. But I mean, he did highlight some of the uncertainties as well, particularly with regards to tariffs and immigration policy too. Obviously, they are waiting to see, if this materializes and has a lasting impact on the inflation picture as well. I'm just wondering, what you make of those comments, particularly because I saw that Paul Krugman had mentioned these two issues, certainly in his latest newsletter. I believe it was today. And, we've got this whole idea of stagflation light now sort of creeping back into the conversation.
Yeah. So he did allude to the fact that Trump is actually remapping how we measure GDP, because he's basically getting revenue from companies and he's getting revenue from tariffs, and he's putting that into the structure of GDP and changing the balance of the calculation. And so there's going to be some recalibration. Furthermore, in the labor market, you've had a number of undocumented workers that have just left. They've exited, they've left the labor force, and they've actually self-deported out of the country. And so there's going to be some recalibration there. Powell notably said that it was probably a one-time price adjustment to, get used to these tariffs, but that it wouldn't happen all at one time. I think that that's probably a good thing. The Trump administration has done kind of a great job of sort of ebbing and flowing these deadlines. And really, so the markets can't particularly price it in, which creates a little bit of heightened volatility. But at the end of the day, because the markets can't price it in all at once, you get an amelioration of the volatility as the data trickles out. So basically, Powell, it was interesting what he said. He said it's a one-time price adjustment. He wouldn't relate it to previous iterations of inflation, but it's not going to happen all at one time. And I think that is the takeaway there.
Got it. All right, Francis, we'll let you start your weekend. Thank you so much for joining us on this Friday.